As the investing world gets bounced around by a bunch of rules and narratives, my first guess says, well, there are no golden rules. I want to bring it out. J.P. Morgan Asset Management Executive Director, also Global Market Strategist, Jack Manley. Jack Manley. Jack, if you have one more title, man, the show would be over. I was checking out your note this morning, right? And you were sort of saying, hey, your note very calm, extraordinarily. I'm in my mind, yeah, But then I looked at Moynihan, Brian Moynihan, CEO of Bank of America, Face the Nation, and he was like saying, look, the consumer is really slowing down. He says that the Fed has to be careful that we don't try to get to a perfect, that they're so perfect that they put us in a recession. And I thought this was even more telling down here. You could dispirit the American consumer. He's talking about the Federal Reserve if they don't cut. What do you see?
I wouldn't disagree with anything that you just laid out here, but I think we have to look at it with a little bit more nuance. I mean, is the American consumer slowing down? Without a doubt, but they're slowing down off of a pace of growth what was just astronomical, and we knew it was unsustainable coming into this year. I mean, could the Federal Reserve try to aim for perfect and let that become the enemy of the good? Absolutely. But Jay Powell has come out time and time again and told us, look, we don't need to see 2% inflation to cut rates, which means I think they're biased towards cutting. And yes, you could dispirit the American consumer, absolutely, but there is something to be said for the unique qualities that dominate the American consumer.
We like
this
to spend
idea
money.
that we like to spend money, and sometimes it's money we don't have, Charles, which is its own problem, right?
Yeah.
But consumption continues, and cooling is certainly in the cards. It's the recession that I just don't really buy.
I want to pick up on cooling as a theme because over the weekend you had Bowman, who seemed like, she's still saying, inflation is an issue. You've had other members of the Fed, one I know who becomes an FOMC voter next year, who are just sort of saying, hey, inflation is still so close or still close enough in their rearview mirror that they don't feel comfortable enough. Are they playing it too close to the vest?
I think they might be. I mean, but that's just the way the Fed's been doing things. I like sharing anecdotal evidence. I'm sorry, but I love sharing anecdotal evidence. When we think about the U.S. economy, the top 20% of the income earners in this country drive 40% of the spending. That's where you have to look if you're trying to see what's going on with this consumer. And as I look around out there, I travel all across this country talking to clients. People are spending like crazy. The hotels are booked up. The first-class cabins are sold out. Restaurant reservations are impossible to find. Concert tickets, sporting tickets, impossible to get a hold of.
Kind of weird, though, because let's take the rest of the consumers. Let's say the bottom 60%. They've spent all their STEMI money. Their savings are under 4%. They work, but then their wage growth isn't growing as fast as it once did. They're getting crushed because their credit card bills are 23% interest. Do they have to wait for rich folks to blink before they get a break?
I don't think it's quite so black and white on that, though. I think when you're looking at the bottom quintile of earnings in this country, that's where a lot of the problems are. We're actually able to look at bank account balances and how they've changed since before the pandemic. Even adjusting for inflation, the bottom 4 quintiles, so the bottom 80% of earners in this country have more money in their bank accounts today than they did even before the pandemic. So not all of that STEMI money's gone. It's the bottom 20% that is hurting a lot. Does that have political implications? Certainly. I think that's one of the reasons you can explain things like populism and why that's become so popular. But most people are still out there doing decently well. You brought up wage growth. That's a huge thing. It's been beating inflation for 12-plus months. There's a story there.
In your June 14th note, you said asset allocation, continue to expect the unexpected. This is great timing, right? Because I don't know that anyone had the Bank of Japan on their bingo card and the carry trade. What could be possibly now? I know it's like asking what would it be a black swan, but where could the unexpected be next? Is there anything that you're kind of worried about but no one's talking about?
I would say there are a couple different ways you could approach that. I mean, complacency is a big risk, right? And while the market has very clearly shifted its focus from being worried about inflation to being worried about employment, we're getting a CPI print on Wednesday, and let's see what happens, right? I mean, this has been a jittery market. If there's even a tenth of a point, beat or miss, you could see an outsized reaction from equities. The other thing, though, that kind of worries me a bit, Charles, is energy prices. And right now, if you look at global energy dynamics, they seem to be reasonably contained. They actually came down a little bit recently. That could be a nice tailwind for the July CPI print. but we know there's trouble in the Middle East. We know there's trouble in Eastern Europe. And if something spills over, blows up, gets bigger and more complicated, and you see WTI hit not 90 or 100 bucks a barrel, but 120, 130, 140, that really challenges the narrative, because it could mean simultaneously recession and a surge in inflation. What does the Fed do with that? I mean, that's complicated.
Right.
It's not the base case, certainly, right? But it is something that you got to be paying attention to.
We've got to go, but I will let the audience know, particularly on radio, your emphasis on large cap value, healthcare materials, and financials. Jack, great stuff.
Thank you, Charles.
Great stuff. I'm glad you had coffee this morning. All right.